Dear students, welcome to Partnership Accounts. Today we'll see when goodwill is created in the admission of partnership. Yes, goodwill generally new partner will be getting inside of the business, inside of the partnership firm. But here he is not bringing, new partner is not bringing any goodwill. It is created. When it is created, who will create? Old partners. When they create the goodwill, how it will be the treatment? Simple two steps you remember. Created, one entry you will get. That is goodwill account attached to old partners account. So this entry you will get, first step. Means that goodwill, whatever goodwill they wanted to create, that amount is to be distributed to the old partners in the given ratio. Beginning they'll give you some ratio, profit sharing ratio. In the same ratio they'll be distributing. Then after that we will not touch this goodwill. We'll open, second step remember, we'll open directly goodwill account. When we open goodwill account, what happened? Goodwill is debit side. So debit side you will be writing the partner's account. That's all. And balance amount, it will be like this. Goodwill account when you open to old partners. This amount you will be writing. That's all, nothing else. So whatever we get this amount, we'll say by balance carried down. This amount will say by balance carried on. This is the amount we are going to show it in the balance sheet asset. It is there in the business. It is distributed by the partners. It is there in the business. It's not withdrawn. So that is why this is going to show in the balance sheet asset side. This treatment you have to remember. This I am going to explain in this today's problem. So hopefully you understood. Created means goodwill account attached to old partners account. Only one entry. After that we'll be opening the goodwill account. When we open the goodwill account, so this is debit side we are writing. Then carried on means this amount goes to the balance sheet asset side. Now we'll see the problem. Problem is given on the desktop. You can see the problem. First I'll explain it. Sita and Geeta are partners sharing profits and losses in the ratio of 2:1 respectively. Their balance sheet as on 31st March 2020 was as under. So balance sheet, if you see asset side, cash at bank means cash 25,000, debtors 30,000, investment, building, simple assets, 4 assets are given. Now liabilities are bills payable, creditors, general reserve. General reserve as usual like previous problems, it is to be distributed to the old partners, that is Sita and Geeta in the ratio of 2:1. General reserve debtor to Sita to Geeta distributed. And capital, opening capital. When we open the capital account of Sita and Geeta, there we are going to take it as a opening balance. Next, adjustments. On 1st April 2020, they decided to admit Radha into partnership for 1/4 share in profit on the following terms. What are the terms? First one, Radha should bring 20,000 towards capital. Radha's capital is 20,000. Goodwill account to be raised in the books of the new firm at a value of 15,000. Goodwill is raised, not going to bring by Radha. Just now as I told you, in the same way, when goodwill is raised, goodwill account attached to Sita to Geeta. Goodwill is going to distributed to the partners. Next one, total creditors is to be reduced by 2,000. Buildings is to be appreciated by 10,000. It comes in the revaluation account. Give the journal entries, necessary ledger accounts and balance sheet of the new firm. So first we'll write the journal entries. First thing is that Radha is bringing capital. When Radha is bringing capital, cash account attached to Radha's account. Attached to Radha's account. How much she is bringing? 20,000. Being capital brought by Radha. Next one, goodwill is to be raised. Goodwill is to be raised in the books of the new firm. When it is to be raised, as I told you, goodwill account to old partners account. Goodwill account debtor to old partners. Who are the old partners? Sita and Geeta. Sita's account to Geeta's account. Goodwill is here. How much they want to raise? 15,000. 15,000 in the ratio of 2:1. 15,000 into 2/3. 10,000 and 5,000. This is for raising goodwill. Okay, it will be in the business only. Next one, trade creditors is to be reduced by 2,000. Creditors is when it is reducing. Creditors reducing means it's a profit. Revaluation account, credit side will write. Second one also, buildings appreciation. This is also profit. Revaluation account, credit side will write. So both together we can write one entry, that is trade creditors, debtor, buildings account debtor, debtor to revaluation account. Trade creditors is to be reduced by 2,000. This is 2,000. And buildings is to be appreciated by 10,000. So it is 12,000 together. Next, general reserve liability side it is given. General reserve is to be distributed to old partners. General reserve account debtor to Sita and to Geeta. General reserve is here 30,000. In the same ratio. So it comes to 20,000 and 10,000. 15,000 when we have distributed 10,000, 15,000, 5,000 it got. 30,000 means it will become double. 10 to 20, 5 to 10,000. General reserve. Techniques, simple techniques. Okay. So then what else we have? That's it. So we can go for revaluation account. We have both the items credit side only. By creditors 2,000, by buildings 10,000. So 12,000. 12,000 will be given to the, this is profit. Profit of 12,000 given to Sita and Geeta. In the ratio of 2:1. 12,000 2 divided by 3. 8,000 and 4,000. So after revaluation account we can go for opening the capital accounts. Sita, Geeta and Radha. Capital accounts. Here also debit and credit. So capital account, when we see, we have to start with the opening capitals of Sita and Geeta, 30,000, 10,000. By balance brought down. $30,000 and 10,000. And here Radha brought cash of 10,000. So by cash. Apart from this goodwill, by goodwill 10,000, 5,000. Next, revaluation account. General reserve 20,000, 10,000. Now revaluation account. Debit to credit 8,000, 4,000. So if we total up, this is 10,000, 10,000, 20,000, 25, 29,000. This is 30, 50, 60, 68,000. So this is balance, to balance carried down. 68, 29, 10,000. Same amount will be writing here. After this, what do? We'll open the cash account. First, opening cash, to balance brought down. How much is opening cash? 25,000. Apart from that, journal entries, first one Radha brought, to Radha 20,000. Next, cash, do you find anywhere? No. So that's all. This is 45,000. Oh yeah. Yes, correct. That's it. By balance brought, carried down 45,000. Now next, balance sheet. So if you go for balance sheet, first we'll start with cash only. Cash is 45,000, means cash is here 45,000 from cash account. And if we see the balance sheet, cash is 45. Next, debtors 30,000. Next, what else? Investments. Investments is 15,000. Next, buildings. Buildings, there is an appreciation of 10,000. So buildings are given 40,000 plus 10,000. It is 50,000. After buildings, what else? Yeah, we can write goodwill. Goodwill account also I'll show you. Goodwill account. When goodwill is created, we are writing to Sita and to Geeta. 10,000 and 5,000. So this is by balance carried down. Carried down means it is in the business only. It is in the business. When it is in the business, we have to show it as an asset. So here it comes goodwill 15,000. Next, balance sheet, we can take directly the capitals. Capitals of Sita, Geeta and Radha. 68, 29, 10,000. Apart from this, what else we can write? Creditors. Creditors value is increasing here. Creditors are 25,000. So the value is written on the credit side, means we have to decrease it. So it is 23,000. Next, apart from this, yeah, bills payable 15,000. Anything else? So that's all. We total up 6829 less the 33 plus 15,000. It is 1,45,000. And also here it's coming 5,000. 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. Yes, 1,45,000. That's all. This is the problem. Let me explain you once again. In this problem, goodwill is not getting by the new partner. Goodwill is created. When goodwill is created, goodwill account attached to old partner's account. This entry you have to remember. Remember this entry. Goodwill account attached to old partners. It is created and sharing by the partners. So this entry. No more entries related to the goodwill. And another important thing, remember, opening of the goodwill account. We have only one entry related to goodwill. So what is that? Goodwill account attached to old partners account. That is, we have written on the debit side. Nothing else to write. So balance carry down. Carry down means it is asset in the balance sheet. So this important thing you remember. Rest of the problem is normal. After this we have opened revaluation account. There we got the profit. So 8,000 and 4,000 distributed to the partners. This one, and goodwill is this entry, and general reserve entry. Altogether we got this much of balance carried down. That is we have written here. And cash account we have opened. Cash account we got 45,000. That is written on the balance sheet asset side. Rest of the entries we have transferred. That's it. Simple problem. There is nothing to worry. Here important thing is that when goodwill is created. That's all. And please go to the description box or playlist. Many subjects, many topics already I taught. I've taken a lot of time and energy to prepare these videos. Do share these videos. Let everyone to get the benefit and let them to feel studies is easy. So this is the motto of opening this channel. Please do share and practice these problems. Suppose this problem, today's problem, after explanation, start it. Wherever you get doubt, you can just check it out, your answer. That's it, simple. Practice well, have a bright future. Good luck.